Hey there.
Well, good morning. Welcome to Married to Real Estate.
You and me again.
Yes. So thestablehouseteam.com if you would like to check out what we have online.
Yep. Outstanding.
Yeah. So what are we going to talk about today, Joe?
So last month we had talked a little bit about loans and mortgage insurance and why you don't necessarily need 20% down to purchase a home.
Right.
And we focused on what's called conventional loans. So this month we're just going to talk a little bit about what are called GOVs, or VA financing, and FHA financing.
Yes.
Right?
Yes. The people's loans.
The people, yes. And the big difference, and we're going to get into it, is that as with a conventional loan, they're insured by PMI, private mortgage insurance companies, right?
Okay.
These loans are insured by the government.
All
and
right.
that's why they're called GOVs, right, in the mortgage world. So VA loans are my personal favorite financing.
Love VA.
They're just such a feel-good loan for us and client when we do it. And so, Ms. Feel-Good, why is that?
Besides our personal connection to having 3 veterans very well connected to our family, our daughter, our son, and our son-in-law, veterans, they earn so much more than what they're given after they're done with their service. And VA financing is fabulous. I know you're going to talk about the details, but it is just a feel-good loan because it is only available to our veterans. It's at a lower rate, and they also can finance up to 100%, so which is just awesome. And many sellers sometimes dismiss VA loans when they see that it's 0% down, that they're financing 100%. They feel like they don't have skin in the game. But my personal opinion, and the position of many others, is that veterans have definitely put skin in the game. Their service to the country, many of them have served abroad. That is their skin in the game, and they have earned this 100% financing.
Yeah, absolutely. And that's why it's such a feel-good thing for us when we go to settlement. And the big part you said was the 100% financing.
Right.
So there still is mortgage insurance, but a veteran is giving a certificate of eligibility, right? And they know how much that eligibility is worth for their loan.
Right.
So real simple, it's 100% financing. So a lot of times, like with builders or something like that, they're getting enough of a credit from the other side that we'll actually go to settlement, and our client is getting a check back at settlement because all they have to do is cover closing costs.
Right. So they put that initial deposit down, and then they get most of that, if not all of it, returned.
Correct. So they're getting into the home with a very nominal amount.
Yeah, we love VA loans.
Yes, and the rates, as you said, are very good, and that's with both types, with VA and FHA. Right. So an FHA loan, the Federal Housing Administration, it is a part of the government. It is a department within the government. Handles the FHA loans and federal housing, right? So they insure, with a lender for both a VA and an FHA loan, you're still going to go through a private lender, and that lender is going to have up to 80% responsibility of that loan, and the government's going to insure the part from 80% to either 100% for a VA or 96.5% if you're putting 3.5% down on an FHA loan. So they insure that part for the lender.
Right. And that's called, again, just to recap from last month, that's their mortgage insurance premium.
Correct. And so with an FHA loan, the benefits there, that if your credit is not quite as good as it should be, and if you have a lower down payment, it's a lot easier to qualify for an FHA loan than it is a conventional loan.
Right. Correct.
That's the main benefit, right? But when you really go shopping, and I do believe that FHA loans are going to be coming more in vogue with our current interest rate environment.
Correct.
You should absolutely, no matter what you're doing, compare an FHA loan to a conventional loan with your lender. One of the things FHA just came out with was they lowered their mortgage insurance premium.
Yeah, significantly.
By 30 basis points, which on a $500,000 purchase would save the average consumer about $130 a month in mortgage insurance, which is a significant amount.
Yeah, that's going to buy you a few eggs.
It is. At least a dozen, right?
At least.
So, good one. Way to slide that in.
I threw you off.
You did. But and what they were doing is they were making themselves more competitive with the private mortgage insurance rates. And so they're going to be able to sponsor more loans. So in short, there's FHA and conventional. There's no stigmatism to an FHA loan.
Right.
I would highly recommend when you go shopping, whether you're even putting 5% down, 10% down, talk to your loan officer, and we have two really good ones we work with, to compare the conventional and the FHA to see which is a better deal for you, because at the end of the day, it's the same financing if you get a better rate. And the mortgage insurance, it's all about that final total payment at the end. It could work out that FHA is better for you.
Absolutely. So, well, wonderful. Well, and if you do need some help with your financing, as Joe mentioned, we have some wonderful mortgage and title companies that we work with. We'd be happy to connect you with our favorite lenders. So please reach out to us. You can reach us on www.sablehouseteam.com, and we would love to work with you.
Yeah, and all your basic questions or any questions you have about financing, we can steer you in the right direction.
Absolutely. Thanks.
Have a great day.